And they slaughtered silver for 10 and a half years. It's been that way. And they've just been using this physical supply to feed the market. Now, when they run out of that, or not enough to meet demand, then, as I mentioned earlier, the market will change, and change dramatically, and probably happen out of nowhere.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to receive this returning guest. Bill Murphy is the co-founder of the Gold Antitrust Action Committee, GATA.org. It's been a long time, Bill, since we've had you here. We're glad to have you back this Monday, January 31st, 2022.
Great to be here, Dunnigan. It's quite a time going on here. It's great to be on your program.
It's not every caller I get, but many who ask me, what is going on in this upside down world where the rules of logic, math, gravity, law, constitution don't seem to apply anymore? You and your co-founder of GATA.org have been investigating and prosecuting wrongdoing in the financial markets for decades, trying to expose corruption, trying to expose manipulation, trying to expose improper trading practices, and the lack of enforcement by those who are supposed to be enforcing it. You've prosecuted cases into the court system and gotten settlements for that. You continue to investigate these things on behalf of free markets and fair markets. So that's the first question we have for you today is, over this past year since we spoke, what additional evidence and data do you have of unfree markets in the precious metals, and do we have any progress towards resolution of obtaining free markets? So let's first start with the downside of that. What have you seen that's been going wrong in the markets in the last year?
Well, last year was the worst year I've ever seen in my life for me mentally to write about it, what I saw in the markets. And I document this every single day. 4 out of 5 days last year, no less than that, the gold market was put through what I call bombs away. Between 2 hours before the COMEX opened and afterwards, gold, silver, and it did it every day. And it did it so much that it's demoralized the whole industry. The share market stinks. Silver was the worst market of all the major sectors last year. Gold was down 3 or 4%. When, as we said earlier, everything was thrown out the window that you were in gold and silver for. Inflation, money debasement, debts, deficits. It couldn't have been a more bullish scene, and they made it with their efforts, what I call the gold cartel, to completely demoralize the sector, and it worked. And, the one thing I do know, if I didn't know how rigged it was and what it's going to lead to down the road, I wouldn't be in these markets for anything they act so poorly. But I do know, and that's where my money is, and I'm not getting out, even though it's been a tough year.
You mentioned the unusual or unnatural market action that happens, like, for example, at specific times of day, right at market open, et cetera. Can you talk to us about why why should people believe that that's not just market activity from the large players having to place appropriate hedges and using the markets as they're intended to be used?
Well, after the first day of last year, gold and silver exploded, and the bad guys, as I call them, the gold cartel, went into panic mode. They said, we've got to do something to get the gold and silver markets down. So they went into this new strategy of bombing the markets in the morning. I mean, I've been doing this for 23 years and seeing the gold silver markets for 50 years. I've never seen anything like it. So something changed dramatically, which, again, I documented every single day or every day it happened. And I think they felt they needed to go into extra rigging mode because the reasons for gold and silver to go up and affect the markets were so out there. So it just went on and on and on, and we haven't got out of it yet. Silver's just above pathetic 22, and gold's was above 1,800. They slaughtered it last week. So they're going to hit the wall, because I don't want to be overly negative in the sense of big picture. When they lose their physical supply to carry out, to complement these paper raids, gold and silver are going to go bonkers. But when it is, nobody knows.
Could you clarify that last point for us? Because a lot of viewers are concerned that this, without official regulation by regulators and enforcement by those who are supposed to be keeping watch over these markets and making sure that concentrated positions, don't exceed limits, et cetera, that this could go on essentially forever, especially if on the paper market, those who start these raids do it at opportune times when they're hitting certain statistical averages, whether 200-day moving average or whatever, and then they can start a momentum downward snowball, and then they can cover it for a profit at a lower price and just rerun that same playbook, wash, rinse, and repeat. When you say this is limited by nature itself because they're going to run out of physical, why do they need physical to just play these paper games forever?
Because, it's normal supply-demand stuff for all markets. In other words, if everyone complains about the paper rates, and yes, that's the villain. But if they weren't supplying the gold and silver markets with enough to meet demand for out there that is out there, then the price would be going up and be like other markets. What market has been like gold and silver last year? Almost none. Every other market went up. Why, when the reasons for gold and silver to move up were there? But I think that their supply is finite in the sense of they will run out of physical supply to meet this demand. The demand from central banks, and certainly the Far East is strong. It's just they've ruined the markets in the money management world in the West and the retail trade market, the way I see it, because all you do is get pounded all the time when other markets go up, so people have quit. But at some point here, and it'll probably come out of nowhere, they will run out of this physical supply to meet these rates, because if not, all you have to do, if the physical market was here and the paper market's here on the COMEX, you buy the paper market and you sell the physical market and you make automatic money. And I complained about that all last year, and it never happened. But that doesn't mean it's not going to happen. But it's just tough to deal with, and that's why people have left the scene.
We were speaking before we got started with the recording about a dichotomy that you're observing and you're investigating in the silver market, and the difference between the paper markets versus where physical actually changes hands. But you said it's more complicated than that, because there's different parts in the physical supply chain, starting from the mining and ending up at retail bullion. Can you talk to us about what you meant about a dichotomy that you're seeing in the silver market?
Sure. Well, if you talk to the likes, these are sharp guys, Andy Sheckman and Miles Franklin and Ed Steer, our colleague at GATA, they're raving about how strong the silver market is, and it's been for 6 to 7, 8 months. And it goes on, and Chris Marcus, God bless him, they're all raving how bullish it is. I say, look at the price. You know how bullish it is. You can't give it away. So the markets for the upper echelon of bullion coins, maybe because I think the Mint stopped producing it a while ago, over a year ago, that the premiums for the coin market are really good, and it's a strong market. You go to the COMEX market, or where the price that the mines get for producing their silver, it's horrible. It's near 22. It doesn't get much worse than that. But it's been going on almost all year. Ever since the silver squeeze, which is a year ago, almost exactly a year ago, the government has been attacking silver to take it down, and they've been relentless about it, led by J.P. Morgan. Some people say that J.P. Morgan is not in there anymore. Horse manure. They're the Fed's bank. They're the leader of the pack. They took off their positions on the COMEX because they got fined for manipulating the market. And it was felt it wouldn't be good for them to be on the visible short side scene, so they shifted to other places like Bank of America and so on. So they've been involved as ever. And I go back to what I wrote 10, 11 years ago. Silver went up to 50. Just about 50. The open interest on the COMEX was 135,000 contracts. The bad guys, or J.P. Morgan, let the price go up. They didn't try to stop it. They bought physical silver during this whole period of time to the last month. The open interest went up in May of 2011 or April 2011, and they slaughtered silver for 10 and a half years. It's been that way. And they've just been using this physical supply to feed the market. Now, when they run out of that, or not enough to meet demand, then, as I mentioned earlier, the market will change dramatically, and probably happen out of nowhere.
So can we look at two parts of that? One, you're talking about, and I know we've interviewed Ted Butler, for example. He talked about J.P. Morgan amassing the largest hoard of physical silver that's ever been documented in the history of mankind. So how is it that JP Morgan comes out ahead by amassing a physical hoard and then dropping the price down over a period of a decade? How does that benefit them?
Well, first of all, we don't know that what's on JP Morgan's books is their silver. It could be for China, for example. I don't know. All I know is silver has never acted worse relative to other markets any time in history, and JP Morgan has been a leader this whole time. I respect that a lot, but I couldn't disagree with them more. JP Morgan has been more aggressive in their suppression of silver this past year than I've ever seen, ever. And that's just my opinion and what I think because of how poorly it's traded. I mean, it's even in a daily action, you have the stock market will go up, silver does nothing. The stock market goes down, silver gets hit. It's happened most of last year. They just made it in total control. So until they lose out of supply relative to demand, it just goes on and on and on. And one day, boom, it changes. But we certainly haven't seen it yet.
And then if we can zero in on the second part of that thesis, and that is, that it says you are talking about when they run out of physical supply. So if I understand correctly, you're saying that at these low prices, which really put a strain on miners, let's talk about that in a minute. But first, the implications on the offtake of physical from the major exchanges. You're saying that both central banks and other major accumulators of metal are taking metal off the exchanges, taking physical delivery at these bargain prices that have been arranged. But once that physical availability dries up, then those prices cannot be maintained any longer. Is that what you're saying?
No, actually, Dunning, and I'm saying the opposite. They're not taking enough demand off the cheap physical. If the COMEX price is so cheap, they should be saying, I'll take some, I'll take some, I'll take some. That's what happens in markets where when the demand is so much more in supply, you can take. I've taken delivery of silver on the COMEX. You take delivery, you say, "Oh, thank you very much. It's so cheap. That's what I want." So I'd like to see more of it. Why they don't do it, I keep getting asked, and I don't understand it except that what happened to the Hunts, and after that was so dramatic, and they know the CFTC what they keep doing. It's so anti-silver, they're afraid of the big money going after them or the U.S. government going after them. Because it doesn't happen.
All right, so you're saying that there would be significantly more offtake of physical silver from the exchanges at these bargain prices if there weren't intimidation or concern on people's parts that they'll get in trouble if they do.
Or there would be no deliveries. There wouldn't be any deliveries. I was involved in the copper market in 1987 with Frank Venerosa. We were bullish way ahead of time, he was. And all of a sudden, in May of 1987, because I was in the commodities arena and I followed it closely, heavily long copper, there were no deliveries. None. I said, this is it. Because nobody wanted to get rid of cheap copper all of a sudden. And the copper price went berserk for the rest of the year. And that's what happens in a way a bull market should trade. So we want to see changes in what's going on in the sense of the silver market world. And I don't see it yet. Now, it's going to change overnight. And I want to repeat myself, if you talk to some of these coin guys, you think the business was booming beyond comprehension.
And we've heard that of several of the delivery months in the past year have been record offtake of physical from the COMEX and also redemption for physical from funds like SLV. Does your research differ from that?
Well, the price action tells you everything. And the fact is there were so many deliveries, people wanted to get rid of their silver. They didn't want to, or otherwise you wouldn't deliver it. So it turns out the price tells you after all this time that all these deliveries weren't bullish, or people taking delivery wasn't bullish at all. Because the bad guys, as I call them, they got enough silver together to keep feeding the market.
So you're still looking for the turning of the tide will come when there are increased physical deliveries taken off the exchanges than what we've seen in the last year.
I'm looking, no, again, the opposite. When there's no physical deliveries, because the market's so cheap in the COMEX, everybody wants it. Now, yes, it could be massive buying by people, absolutely, and that can happen also. But all I know is what's happened this past year. It's been astounding. I mean, to be the worst market of all, when it's the most bullish scene I've ever, in terms of fundamentals for silver, you can imagine. It's not like the markets collapsed. Only silver went down.
How does this affect producers like the major silver miners over the past couple of years?
Well, I'm a big fan of Keith Neumeyer and First Majestic, and I've got invested in it pretty heavily for what I do. And lately, it's just been horrible, just terrible. I mean, it's back below $10, per share, and it spiked on the silver squeeze a year ago, and gave an opportunity to get out of some. But I mean, they've just been hit hard because you look at the price of silver. I mean, to be talking about silver with a 22 handle after all these years is numbing. And I have been wrong. I thought silver was going to take off way ahead of this, and it just hasn't happened.
It's interesting, too, when we look at those nominal prices, it can be bewitching or befuddling, because we're looking at prices in inflated, devalued dollars as well. So it even makes your argument stronger in that regards when we've had John Williams from shadowstats.com on talking about the actual consumer price index and the actual inflation of the currency supply and so on. He's saying that we would be in inflation adjusted terms, we'd be looking at much lower prices than these nominal prices that we're currently seeing. So what's currently billed as $22 silver on the exchange would be something like half that or less compared to the 1980 prices that you were referencing earlier.
Yeah, well, John is a smart guy, and all I know is, from my standpoint, all you hear about is inflation, and it's a big deal, and interest rates going up. This past week, they didn't go up. It's another point I'd like to make. Last year, every time there was Fed speak or Powell spoke, every single time, gold and silver were bombs. It didn't matter what they said. In the market come out, they screaming about interest rates and all this stuff and reasons. Gold and silver always went down no matter what they said. And then nothing happened after they made this big commotion. And until this month, the last year, the stock market just was fine and dandy. Gold and silver.
In the preparedness world, and you know this because we've been talking together for a long time, almost a decade, we talk about I'd rather be 7 years early than 1 day late, because you position yourself ahead of time, because if you wait until the crowd is going to basically confirm your assessment of the fundamental situation, then it's far too late. You find yourself in a terrible scrabble and a scramble for what scraps are left. So when I met you for the first time in person at the Liberty Mastermind Symposium in Dallas, Texas, your first question to David Morgan was, David, we all expected this thing to break free and to trade freely for the first time. How did we get this so wrong? What new perspectives have you gained since that several years ago question that you asked about how did we get this so wrong? Is it just that you were that much ahead of your time, that you were that much earlier in position?
Well, you split it in 2 decades. I mean, when Ghana got started in 1999, and first 2 years were tough, and the price of silver and gold bottomed at our conference in South Africa, in Durban, and it ended at our last conference in London in August of 2011. And so then you had a decade of gold and silver did magnificently. And then the last decade, it's been horrible. Gold is lower than it was 10 years ago, 10 and a half years ago. And silver is 50% of what it reached in 2011. I mean, there's been no markets like that. We did not, and I try to explain what I think happened with J.P. Morgan getting all that supply, and there's the ringleaders of this whole thing for the U.S. government has had enough supply to keep the market under pressure. That's why I keep saying it won't change till it runs out. Now, I thought years ago silver would start to make its move. No, it's just the same thing has continued. And again, I'm not like saying, oh, I'm so smart, that's where all my money is. So I'm just saying I think it's going to occur, and it's going to be dramatic and will come out of nowhere.
There's one more aspect of this we haven't talked about, you and I, and that's you mentioned and I think you're always assuming as part of your model that you're describing, if I understand you correctly, that you're talking about like a finite physical supply, and then if you have real demand and a real supply, eventually if there's an imbalance, then the price has to go up if the demand outstrips the supply. But what in this world of deception and betrayal, as James Rawls from survivalblog.com, who we've had on, talked about, he says we're living in the age of deception and betrayal. We've been betrayed by our political leaders, by our medical leaders, by the press, a financial elite, and on and on and on. In this arena that we're describing here about assuming as part of the normal world where gravity and physics and math and the Constitution apply, we think there should be a finite physical supply and a physical demand, and there has to be some sort of a balance reached, and the balance point is called the price. What if, and this is what we discussed with Australian economist John Adams, what if there's been a deception and betrayal, and that what everybody thinks they own in terms of physical silver through all of their investing of dollars or whatever into this market has actually been soaked up by an infinitely elastic fractional reserve system where unallocated silver has been rehypothecated. In other words, more ounces have been sold than actually exist, and there have been several cases, postulated that where this might be happening in different continents around the world. Big name sellers of unallocated silver reserves. If that could be soaking up all kinds of monetary demand, but not actually requiring any increased physical to satisfy that demand, would bringing truth to that if that's been another place of deception and betrayal? So that, in other words, if everybody who's holding unallocated silver either in an IRA or in an investment account or a storage account, if they all said, I'm getting out of unallocated, I'm going into physically allocated, I'm taking physical possession, that sort of thing, would that be a meaningful factor in your view of bringing some reconciliation, us back to the truth of what's really available physically?
Unfortunately, no. And I say that because, again, the guys in our camp that are so bullish, and I don't blame them, because I am too, are so wrong. They just don't say why. Basel III, that was supposed to be on June 28th, when the unallocated situation really had to be tightened up and changed, and then at the end of the year with the Bank of England. Huh? Nothing. Can that all of a sudden change? Yes, and I think it's going to at some point, but that's what everybody thought was going to happen by the end of the year. Didn't happen. So all I can say is I used to follow all these different things. I just follow the price action. That tells me all I need to know, because everything else, you're correct. I mean, there's so much deception out there in all these markets between the plunge protection team and how they can move other markets around. And they're in a tough situation because what are they going to do? We got inflation, but if they can't raise rates, people go berserk. So you got the yield of the 10-year note about 1.8%. It didn't go up last week at all. And then gold and silver with this. And they move the dollar around if they want to accommodate what they want. So this deception idea is rampant, and it's out of control, but it's obviously gone on longer than I thought it would have, and what a lot of others thought it would have, and we keep watching for changes, and that's all we can do.
That's the last part I was going to hope to circle in with you back on, that idea of preparedness. We've often interviewed Rick Rule, formerly of Sprott Asset Management, and he talks about the skill of a value investor, where you really analyze where there is value. And if you see that the value is being underpriced or underappreciated by the market, then you take advantage of that by accumulating when it's out of favor, when you buy what other people hate. So it takes a lot of stamina to be wrong long enough to stay in that position long enough to finally be rewarded. You think, in your view, that the powers that are causing this distortion to persist and to prevail this long, what do you think will be the key elements that would bring a change to that will bring reality and truth back to that?
Well, based on what we're seeing so far, again, nothing's going to change until they go back to the supply situation when they just can't carry on anymore. They run out of ammunition to do what they're doing, because we had this conversation maybe did a year or two ago or 3 years ago, and what's changed? And that's my point, is that this is beyond anything I've ever seen before, and what a lot of others have seen. So those of us who have our money in the sector aren't getting rewarded. As a matter of fact, we're getting punished. But as you've been talking about, I do think it will change. It'll be dramatic. So I'm hanging in there. But am I disgusted? To have to write about it every day and say the same thing to people, it's terrible. It's bad for business, and money managers are quitting the sector like crazy because they all have relative performances to deal with, and they've been killed.
Yeah, we're very concerned. I'm concerned about the futures of ordinary people who are banking on the perpetual bubble of everything that's been floating the major stock markets, bond market, real estate market, because that's a lot of baby boomers who have a lot of their nest eggs tied up in that. And even my own father-in-law, who's now deceased, when he was coming to me a decade or more ago and asking, he says, I used to be able to make a good living off of my certificate of deposits at the banks or a ladder of bonds or whatever. He says, now what do I do? The interest rates are down near zero. I can't get a yield anywhere. And he didn't want to gamble in the stock market as he saw it. So it left him really in a tight position. So I'm really concerned about ordinary people. And I am very respectful of people who are positioning themselves, at least with a significant portion of their nest egg, to hedge against potential downturns in all of those markets of the bubble of everything. But Gregor Mannarino refers to the metals as the anti-bubble. He says, you ought to have a significant hedge by investing in the anti-bubble rather than just being all in the bubble of everything. So final thoughts from you, Bill, where people can find your work, and final thoughts from you before we wrap.
Well, to finish up from my end, John Embry, my friend used to be a Sprott, I talked all the time, says the same thing, that he's so concerned that he's forcing the little guy to do the wrong thing. And that isn't playing out right away, but I think that's what you're talking about, and I couldn't be more on board with that. In terms of what I do in the Metropole Cafe, I write a column every day, and people can sign up for a 2-week free trial, see if it's of value. And then my colleague, Chris Powell at Gada.org, people can get on his list. It's a free list. Chris does a great job, and we're continuing to fight the good fight on behalf of God. And the best thing to understand is what we know and why these prices stink so much, because that's what's going to lead to people making fortunes in this coming decade versus this last decade.
Yeah, that's the thing. I guess when you were talking about only following the price, I'm a little concerned because the price is what we all are presented with, whether it's about the stock market prices or the precious metals market prices, but that can lead us to be in the wrong place. So from a value investing standpoint, we want to put ourselves in the right place. As who was it? The great one, Gordie Hall, saying, "I want to skate to where the puck is going to be." So, yeah.
Yeah, I remember meeting him. But anyway, I thought about value all these years, and it's got me no place. Because you're correct, don't get me wrong. But my point is, the market's eventually going to tell me when that value is kicking in. It's not like I'm waiting to get involved. I have my money there. I'm just waiting for the price to tell me that value is finally taking over.
Well, Bill, we're grateful for your continued insights, and also for you and Chris Powell keeping to present the truth as you find it, because we cannot rely on mainstream financial media or any other mainstream media to give us the what's really going on behind the scenes, rather than just looking at the headline numbers. And we're grateful for your presence here again on Liberty and Finance.
Thanks much, Dunnigan. Good to see you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.